Right, welcome back, guys, to our second session, our advanced trend class. Okay, and just to give you a recap of what we're talking about earlier on, first of all, we described that price moves in three basic directions. We said that's always up, down, and sideways, which is the scenario we have here of what price moving up like that, what price moving down, and we have price moving sideways. That's simple. And we say to draw trend lines, you simply need to connect the major points of the trend, right? And we gave some rules, which I'm sure you can check out if you've forgotten. But those rules simply say that you should be able to connect the two most recent points. You can cut wicks, but not bodies when you're connecting. And you have to make sure you're using the major structure points, right? The points that stand out to you. Don't force anything. Don't try to draw what you want to draw. Just clear the chart and draw what is obvious to you at the moment. Okay, so now we're going to be talking about what we call trends in trends, right? What we call trends in trends. And basically, the theory that's behind what we're going to be talking about is this: that whenever you have a market that's pushing up, as is the case over here, within this trend on a lower time frame, you're going to find that you're going to have another trend taking place in there. Okay, so if this is our lower time frame of this entire bullish market, what you're going to notice is this part in which price is going down is going to be its own trend, right? Which means you might be able to come in and draw a trend line on that part to see that the market is going down and it's respecting what you would call a bearish structure. Okay, so every time when you see even price moving up in this scenario, it's not going to move up straight like we've already indicated. It's going to have some sort of a waviness to it, right? When it's moving up, it's going to have some sort of a waviness to it. This is what's going to be happening on a lower time frame, right? It's going to be moving in a choppy way, so you might be able to spot a trend within this move that's going what? Upwards. All right, so you always have a trend that's taking place within a trend. Okay, that's the first thing that you need to be able to know. All right, now we need to talk about something that's called the nature's theory. Okay, and what the nature's theory is just a proposition that when the market moves, it's got a formula of movement, which is two phases that it assumes. One phase which is called an impulse phase, and another phase which is called a correction or corrective phase. All right, now in the case where the market is bullish like this, you would note that the parts where price moves up would be more impulsive, and the parts where price moves down would be corrective. And to give you a definition of what a corrective and an impulsive phase are, the impulsive phase is always characterized by a strong push upwards, right? Which means if you try and identify, or rather, let's say, if we try and identify the trend in the upward push, or the trend in trend for this upward push over here, you're going to find that there's going to be minimum movement downwards. It's just going to be very strong moves up, very decisive moves up, which will have minimal shifting to the downside. Okay, there'll be minimum shifting to the downside, but when you start to see the market move down, right, it moves in a very slow, corrective, and choppy manner, right? This is what you begin to see over there, that this price, it starts to just move so slowly. It's so weird. You get a lot of candles, a lot of wicks that are in there, and if you just look at this section over there and you try and count the number of candles it took for this move impulsively and the correction, you'll find that there will be so many candles in the corrective phase. So many candles in the corrective phase. And you'll be wondering what's taking place. The correction will be so choppy, so choppy. Counter trend, normally going against the normal trend. And it will have a weird way of presenting itself. It's sort of hard to tell what the market is trying to do. But when you have an impulse, it's decisive. One time, you can tell. It's so clear like light of day where the market is going. So the proposition of this theory is that the market will always move. When it's going up, it will always be decisive about its decision to go up, and it will be very corrective or choppy when it goes against the trend, where it will be accumulating more orders to push another impulse again, which will be strong and very decisive. And again, when it comes back down, as you can see, tons of candles, or sometimes it's just going to have a weird way of moving down, where we will see a lot of candles. We'll see an indecisive behavior in the market, and we sometimes won't be able to see what the market is trying to achieve during such a corrective phase. All right. So I am going to demonstrate what all of this looks like on an actual chart. So don't worry too much about what it looks like here. But in terms of the lines, I hope it's clear enough from a perspective where we're drawing these simple drawings. All right. So let's just write that down, that we need it's decisive. I hope I'm not going to butcher this now. And it's a strong momentum in one direction. Right. Very strong momentum and very decisive when you have your impulse. Okay. And then during your more corrective phases, you're going to have choppy movement. It's normally counter trend. There are scenarios where it won't be counter trend, by the way. And normally you will find there will be a lack of overall momentum relative to the impulse. Okay. Like that, right? So this is how you'll be able to identify what we call a correction, and this is how you can be able to identify what we call the impulse. Now, remember, these two things are related. So what we called the trend in a trend is related to nature's theory. All right. One may ask, how so? Now, if you look at this trend, what we've simply done here by looking at the lower time frame is that we've identified that when price is moving down, it's a correction. It's choppy. This here would be our correction. So these would be interrelated, right? Because when price is moving up, it's very, very decisive. Let's spin that and say when price moves up, this is what we have. We have a strong impulse, right? According to our theory, we have a strong impulse when the price moves up, and when price moves down, we have a corrective move. It's something that's a bit difficult to understand, and it can be choppy. All right. So the question is, why would anybody want to know about this nature's theory? Why is it important for a trader? Now, the reason it's important is, as a trader, you want to be in the market. Like we said, the market is buying, but you want to be in the market when the market is impulsive, meaning it's decisive about its direction, and you are least likely to be stopped out of your position when the direction of the market has got a lot of momentum and it's decisive. But in a situation where the market is corrective, it's normally so choppy and candles are all over the place. There's a risk that you could get stopped out of your position and you could end up losing the trade, right? Because you're trying to get involved when the market is busy correcting and it's throwing candles everywhere. So you definitely want to stay out of the market when the market is doing that. It's definitely more difficult to find trades during this time, and the range of candle movement sometimes decreases because it's a corrective period. So what we normally advise traders is to try and not trade during corrective phases, okay? But there are scenarios where, again, you may be able to trade in a corrective phase. Now, let's simply pick out this corrective phase, for instance, right? We want to take a closer look at this correction. Now, what we're going to find when we take a closer look at this correction is, whilst the correction is happening, because we know that within a trend, there's another trend, you might find that the market may actually be assuming a strong impulse, a weird correction, a strong impulse, a weird correction, and a strong impulse again, right? And this is all within this move that's appearing up there. Now, I hope you're not getting confused over here. I certainly hope you're not getting confused. So what we're saying is, because we've now noticed that we've got what we call trends in trends, there's a possibility that within this entire corrective phase over here, whilst it is corrective, there might be another trend that's taking place within that corrective movement, which is over here, where you'll find that because price is dropping, it might be dropping very impulsively, and then when it moves up, it becomes choppy, and then it drops down very impulsively, and it moves up, it's choppy, it drops down, it's very impulsive, because our theory says that within each trend we may find another trend. So whenever we have a buying phase, as we see here, there could be selling opportunities that can be found during the corrections where there will be impulsive sells and corrective buys. And if you look closer within these corrective buys and you go to a lower time frame, again, you will see that price will be moving up impulsively, dropping more correctively, moving up impulsively, dropping correctively, and so on and so forth. Okay, these things happen on many time frames. They happen on many time frames, right? So for you as a trader, what your job is to be able to accept that this is going to be happening a lot. The market is going to be moving in an impulse and correction nature, right? And when it corrects, you'll find within those corrections, you'll be able to find some impulses, some corrections, some impulses, some corrections, because we can find trends within trends on any time frame. Okay, I hope that's been clear enough. If it's not been clear, I'm sure you'll understand when we visit the candlestick chart. All right, where we're going to illustrate more what exactly is taking place and how you can spot these impulsive and corrective phases. All right, so we are back to Nasdaq, and on Nasdaq again, we're going to be illustrating to you first of all how you can put together the first section which we used to spot the direction or to spot a trend, and then we're going to show you how you can spot the impulsive and corrective phases, and then I'm going to show you how within each trend you're going to find another trend, and within each impulse you may find a corrective and impulsive phase. Within each correction you may you can also find another impulse and corrective nature that will be taking place. All right, so let's demonstrate it. So let's start with this part. I think we highlighted it in our previous video, and we all agreed that in this part price is moving down. Okay, let me box it out so that it's easier for all of us to work with that area. So we are assuming that everything that's over here is not taking place. So what we have here is a downtrend or bearish market, and we can all appreciate that price is moving down, right? But again, we said we want to use the nature's theory to be able to identify good times and bad times to get involved in the market, because yes, the market is selling, but it moves in an impulsive and corrective nature. So we need to identify where the impulses are taking place so that we can be able to maximize on those impulses and be sure that it's a good time to take a trade. So if we drop down to a lower time frame, like the 4 hour, this is what we're going to identify, right? First of all, we're going to see that from over here, when price moves up, this section, let me circle it. This section here, you get a choppiness to the move of price, right? It becomes so slow. You've got tons of candles over here, and there's some sort of sideways movement where it's difficult to tell where exactly the market is going. And straight from there, you see an impulse, right? very strong and decisive buying momentum. Can you see that? I hope that's clear enough for you. And then from there onwards, you also notice that price starts to decline, starts to move down in this entire leg over here. But when you look closely at the leg, you're going to see that from over here, we've got a very strong decisive sell, right? And we've got a counter trend move over here, right? With a lot of candles. Just look at the number of candles. Let me show you how you can use this tool to count the number of candles. So over there, we've got 16 bars for price to move from here up to this high over there. We've got about 16 bars. But when you look to the left, where price dropped, you can see that it's only 8 bars. Okay, just for price to drop from the same, it's actually 5 bars. Okay, let's do that. From the same price point of over there, which is 14,681.1, from this same price point, price dropped to this low just by 5 bars. But to make the move back to the same price point, you're going to realize that it took it 11 bars, twice as many candles for the price to move up. Now it shows you that the kind of move that was taking place here was not as decisive. It wasn't as strong. It was slower, and yet more candles. It was choppier. All right. So let's just mark out that area as a corrective phase. Now, if you are a trader who was looking for a short, remember I just connect the two most recent points over here. I'm sure you've mastered that by now. So now, if you're a trader who's looking for a sell position, right? When you start to see this strong, decisive selling momentum, maybe this could have confused you. But when you start to see a strong, decisive selling momentum and you see a corrective move that's now taking place over there, what this signals to you is it's a good time to get involved for sales. Because every time the buyers are coming in, it looks like they struggle to push the price up. But when the sellers come in, they do it so decisively. So decisively. And then again, the buyers try to step in. The candles are many to cover the same distance that these guys took 3 bars to drop. And these guys are now taking what? 1, 2, 3, 4, 5, 6, 7, 8, 9 bars just to cover the same distance. And then again, you have another wave of an impulsive and decisive move. Now, do you see something? It's now a much easier thing to know when to get involved, because you can see that the market is giving you all the signs. It's telling you what's taking place. It's telling you, hey, this is a good time to sell. The market makers are pushing price lower. And when you see this, when price gives us the second point, remember when this happens, we don't have a trend line as yet because we only have 1 point, right, as a major point. What we just have is the top trend line, which is showing us these 2 points over here. And we don't necessarily have 2 major points. Maybe at the time we're still using these points over here. And when we see price dropping lower, we're going to realize we need to evolve with the price. So we might remove this line, all right? And then we see price moving down, and then we see a strong push up. Now, just by looking at these candles, we know, looks like the buyers have come in really strong this time around, right? But then we start to see this choppy price action again, okay? Yes, it's going upwards, it's buying, but already what this signals to us is the power of the buyers is becoming less and less and less and less, right? Because we are now having a corrective move upwards. So chances are, because it's corrective, we're going to experience a reversal, okay? We're going to experience a reversal in the direction that our overall trend seems to be going, okay? And true to the word, what do we see next? We see a few candles being able to push price lower. Now, if you just compare the number of candles that you see in this section and how many candles it takes to drop the same distance to where this price action started, you're going to see this is less candles. So there's more selling momentum that's now at play in the market, okay? So that's how you sort of spot these kind of things, right? So if we go back to the daily chart, and let's remove these drawings. Now, if you go back to the daily chart, overall, you could see that in this price action, we're beginning to see a slowdown because we had a lot of candles. We had a lot of candles that were dropping. We had less candles dropping here. But then this whole thing starts to show us that, yes, we are dropping down but it's now much slower than we had seen over here, where it was very, very decisive in this section over there, right? Very, very decisive over here. So what we're trying to do now is to be able to identify when the market has changed its phase, and true to the word, we see all these bars are annihilated by this move, which is now an impulsive buying move. And you can see just by the size of the candles that this move is very strong. All right, it's very, very strong. So what you can now do is, if you try and look within this impulsive move, remember we want to try and demonstrate that within that impulsive move, you also have other trends taking place. Okay, so let's just focus now on this part over there. And if we drop down, let's go to the 1 hour chart. I hope this will illustrate what I'm trying to illustrate to you. Okay, this will work fine. Now, look over here. We've got very impulsive buying taking place. Very impulsive buying. But the question is, what's taking place here? What is taking place over there? What is taking place over here? What is taking place over there? What is taking place over here? I'm sure you can agree with me. These are all phases of corrective moves, right? Because what we can see is price is difficult to understand, right? As is in this case, you've got these 2 points that we can connect, these 3 points that we can connect at the top, and we've got these points at the bottom. Generally looking like a counter trend move, going lower instead of higher. It's got a lot of candles, but with so many candles, it couldn't even cover just this one candle. You see, it's very choppy and difficult to understand where the market is going. And as soon as this phase is over, we see a strong move up. When we see a strong move up, and then we see another period where we've got a bit of a corrective phase taking place, right? We can't really tell what's taking place here. Should we buy? Should we sell? But as soon as the phase is over, bang, we see a strong impulse again, all right? And then again, you start to see within this move, you've got this over there. Let me do that. Remember, I'm not trying to force any line. I'm drawing just what I see. Here, it's a bit difficult for me to draw what I want to see, but if I connect the recent points, I may have 3 touch points, the first, the second, the third over there. Can you agree with me? If you look at this entire thing, it's kind of difficult to understand because price was moving down, then it was moving up. At the top, the price was relatively constant. Whatever is taking place here is not a good time to get involved in the markets because it's difficult to understand what's taking place. But then, yes, we have another strong impulsive move. And then we have again another weird and corrective period over there. So I'm sure by now you get the point. What I'm trying to illustrate is every time you've got a strong trend, let's do that. Every time that you've got a strong trend, as is the case over here, right, we can see that the market is moving up. Okay, I cut too many bodies here, but let me use this section. You can see that we've got a strong move up, but within that strong move, we've got a weird move in the opposite direction that's taking place over there. It's a correction over there, right? Over here, we have the same thing. A weird what? Corrective phase. Can you now see it? We've got a weird corrective phase over there. These 2 points are already connected. Then we have a strong rally over here. Let me use my pen. We've got a strong rally illustrated over there. Bit of a weird move, and then the final stroll upwards to this point over here, right? We're going to use this trend over there. Let's assume we didn't have this price section over here. Let's talk about this section, right? You're going to see again, we've got this as an uptrend, strong impulse, and a weird what? Correction. An impulse again, a correction. an impulse again. So if you're a trader, what you want to do is to catch the end of these corrections so that you're in the impulse move. Okay, so our strategy is we try to catch the ends of these corrective periods so that when the price moves impulsively, we're on the inside of an impulsive move. During this corrective phase, we want to minimize our involvement because we know it's difficult to anticipate what can happen during a corrective phase, and you could easily lose money. All right, so I hope from what you see over here, you can now sort of begin to make sense of what's taking place over here. Let me just clear this out a bit so that it's not as untidy as I then made it. Right, delete. Okay, so if you then look at what I was describing to you, you start to see it that each time price moves up, it's moving impulsively, it's coming back correctively. Now you see how ideal these kind of drawings are, right? I'm sure you can see they just to illustrate the point, but it doesn't exactly happen like this in the market. Sometimes it does, but it doesn't always exactly happen like this. Now you can identify a corrective phase, another strong impulsive phase, which will again have very few turns on the inside. It will be very strong. I think you get the idea. And then you've got a corrective phase and another impulsive phase, and that's how price moves up. But within that correction, you can also identify another trend. And this is what we saw over here on the 4-hour chart, that we said during this entire downtrend, sometimes you could see there were corrective times within the entire downtrend, right? You had a period that was corrective, you had a period that was corrective over there, like that. But the entire trend was supposed to be, is a downtrend, okay? And perhaps if you try to look within here, you might find, let's actually try and do that for the sake of this example. Okay, let's connect the recent points and try not to cut into the bodies, right? In as much as this is choppy, you can also identify that you've got a bit of a strong move up, and then whenever price comes down, there's a number of candles. It's a bit weird to sort of spot what the market is doing. And then whenever price decides to go up again, you've got another strong impulse, and you see another correction over there, and you have a strong impulse until this entire corrective phase is over. You can now begin to see that whenever price moves in a particular time frame, it moves with impulses and corrections. Okay, now again, ultimately you need to practice to draw these things, because they're going to help you to identify good times to get involved in the market and bad times to get involved in the market. You certainly want to be in a trending market, because I mean, if you're going to look just at this section over here and price is shooting up, you identify price is shooting up, you can identify when the market is being corrective, you can identify when the corrective phase is over. What are the chances when you enter the market it's going to stop you out in such a strong trend? If you buy in such a trend and you know when the corrective phase is over and how to enter, chances are you're going to make money. Chances are you're going to be in profit, and you're not going to be stopped out of your trade because the trend is strong. You can identify when a clear impulsive phase, you can identify when the corrections are beginning to happen, and you can stay out. And when the corrections are over, you know it's time to get into the market and start making money. Okay, right. So I hope that's been clear enough to you guys, and you have at least been able to learn what the nature's theory is, what trends and trends are, how the trends and trends are related to the impulse and correction nature theory, and how to apply these things on a actual chart. All right, I'm sure if you just start practicing already, you now know how to draw a trend. You now know how to draw a trend, and when you now know how to draw a trend like this, you now know how to look for the corrective phases on the inside, right? Already you can see it. If you're just a person who practices, you're going to see it whenever the correction is taking place against the trend, you're going to see it. It's going to be right there, right there. And you're going to be able to tell when the market is strongly impulsing. You're going to be able to tell when the market is strongly impulsing. You're going to be able to tell when the market is in a strong impulse. Another strong impulse right there. Even though it was impulsing here, you can tell that we had a small correction that took place over there. Perhaps it will be clearer on a 1 hour time frame or something like that for you to see. Okay, yes. Counter trend, tons of candles, indecisive momentum, very slow momentum. Look at how strong this move was. You see that? So if you are able to spot that, it's going to help you a lot with determining your directional bias. Now, even if you drew your trend lines wrong, the ability to tell when the market is impulsing and when the market is correcting will help you to test whether you drew the trend line right, whether the market is actually going where you think it is going, because now you've got added confluence to show you that, no, look, this market is going down because it's strong when it goes down and it's weak when it goes up. It's strong when it goes down, it's weak when it goes up. Strong when it goes down, it's weak when it goes up. And even when the market tends to go up, like in this section where it is weaker, you can still go to a lower time frame in that section, and you will be able to identify that during this corrective time, it's got strong periods of buying pressure. Sometimes when it sells, it's got a choppiness to it. No, it's got a weird way of selling, which is sometimes difficult to understand. When it buys, very decisive. Sometimes when it sells, it starts behaving weird. Look at all this choppiness over there. Just this section over there. Yes, it was very decisive when dropping over here. When it gets towards the bottom of the trend line, the support trend line, it becomes very choppy. And then again, you start to see a choppiness going up. This is why you don't want to be involved in corrections. Yes, you can spot a bit of the trend in a trend. Price is moving up. It's a bit choppy. It's strong. It's a bit choppy. It's strong. It's a bit choppy. It's choppy all the way over here. It's difficult to understand because what we're used to is just an impulse and correction, which is something that is clear on the 1 hour chart over there. Right. This is something that is clear on the 1 hour chart. The price is dropping. It drops decisively. So you want to stay away from some of these inner things that are happening. Yes, there are times when a correction is clean and you move into the lower time frames of a correction and you see clean price action, but it's not always the case. I'm trying to hammer this home so that you get the full picture, because if you don't master this, you might struggle in the sections that are to come. So as an exercise, just go on a chart, start to draw the trend first, identify the trend using your trend lines to make it simple. And then when you've identified the trend, as we did over there, like so, you simply mark, this is a major high that I've connected. My two last recent points, which are major to me, I've connected them. It looks like a descending channel, fine. What is the nature's theory saying? Does it support that price is dropping impulsively? Yes, it does. It shows you that the corrections are there. Over there, you've got a correction. I think I've already shown you this. You've got a correction there. Now it supports the times where I should get involved in the markets. All right. It tells me that whenever you see such a slow buying momentum that's now taking place, just avoid it. And then whenever you see that price moving back down, chances are it's going to be strong and decisive and impulsive, and we're going to make money during those periods. So in the following videos, we're going to be defining what's called the market structure. And market structure is another tool that's going to be able to help us to identify where the market is going, and it's going to be a build up for how we find entries to take price lower. So I hope you enjoyed this video and you managed to learn a lot. Cheers.